everyone. A very good afternoon. You're watching the newsroom on ET now. I'm Mubina Kapasi. Markets, well, we've come off from the day's high, but still sitting on gains of about 0.4%. The Sensex gaining 0.5%. And I think largely you are seeing a lot of action in the telecom and technology pack. Realty as well joining in on the gains. But utilities, oil and gas, commodities are all a bit sluggish today in trade. Let's tell you what we have on our radar in our Market Fatafat segment. And first up, it's got to be Britannia. This FMCG major reported its second quarter numbers yesterday, and volume growth, as mentioned by Mr. Varun Berry, is 9%. Street may not be very happy with what they've done on the top line. There's a double-digit growth, no doubt about that, but still, I think it's left investors wanting for more, especially after the kind of performance and commentary given by Britannia during the Q1 numbers. Britannia today is in fact the top Nifty Loser. It's more than 5% gone in trade, and it's one of the reasons why the FMCG pack as well is a bit lackluster today in trade. All right, well, moving on to to some better numbers, if you could call it that. Look at Oberoi Realty, a massive 12% spike being witnessed on the counter, and there's a tremendous amount of action on the volumes front as well. 5 times the 20-day average is where we are seeing the volumes. And the Oberoi Realty stock itself is taking the Nifty Realty as well higher by about 2% in trade. We have Goldman Sachs that's maintaining a buy on the counter with a target at 475 rupees per share. They are saying that the Q2 bookings and revenue performance was relatively strong, and that they see better than expected cost execution in the near term. Momentarily moving away from earnings, and let's talk about Hind Copper. This is a stock in focus. We do have reports suggesting that the NITI Aayog Vice Chairman Rajiv Kumar is scheduled to chair a meeting on the 27th of October to discuss the possibility of a strategic sale of Hind Copper. Remember that the government does have quite an ambitious divestment target for the current financial year ending. Plus, we had my colleague Ruchi Bhatia as well, who broke the story that the government has asked a couple of PSUs to go for buybacks. So yeah, keep an eye out for Hind Copper. It'll be an interesting turn of events if this approval does come through. Let's also take a look at a Just Dial. We're seeing a lot of momentum come by in this counter for the last couple of days. And today as well, it's a double-digit uptick being witnessed in this stock price. Quite a lot of momentum on the technicals, otherwise as well. Like I said, it has been buzzing since some time. In fact, in the last week, the week before this, it was up 17%. So a lot of momentum, and it actually posted the best week since the 3rd of May. Today, once again, it's continuing its gaining trajectory. And finally, let's wrap up Market Fatafat with our last stock for the day. And well, this one once again is a result reaction, but this time not such great results. This is Rallis India. That's the stock I'm talking about. And could have done perhaps a little better. A weak set of numbers. Sales declined by 3%. The street was estimating a growth in double digits, that too. Mind you, though, performance across the domestic segment did remain strong, but there were certain pricing issues for key products in the international markets that led to a 29% decline in exports. There was an improvement in gross margins, but the EBITDA, did decline by about 2%. So there you have it. Those are the big movers and shakers today in trade. And let's move on and let's talk about more earnings. Then we had cement major ACC that kick-started the cement earnings this quarter. The profit after tax, the revenue managed to beat street expectations. A 300 crore PAT versus the ETNA poll, which pegged the figure at 280 crores. And revenues as well, like I mentioned, beat the expectation. Let's go across to my colleague Vivek Iyer for the detailed review of ACC.
Well, some good news for the cement sector, given the fact that ACC, that declared its numbers yesterday, has actually given a blockbuster set of results. It's above most of the analyst parameters on all of the fronts. And in fact, if you're talking about the revenues, even though it was flat on a year-on-year basis, the volume uptick of close to 1% on a year-on-year basis and a very sharp volume recovery sequentially augurs quite well as far as cement demand going forward. What's most interesting is that, number one, cement demand has recovered very strongly from the the lockdown as well as the post-monsoon season. However, what is even more encouraging is the fact that there appears to be quite a bit of green shoots, as is visible from the commentary given by ACC. As expected, what ACC is saying is that rural and retail sales were actually what led to the comeback in demand, while urban demand is yet to recover fully given the lockdown situation still prevalent. Now what they're saying is that across most of the brokerages along expected lines, you're seeing big EPS upgrades, you're seeing buy stances being retained, and Goldman Sachs says that the favorable mix is something that has driven higher top line. Also, what is quite evident in this particular result is that the MSA or the Master Supply Agreement that ACC has with Ambuja is something that is actually leading to significant cost savings. And again, this is something that is most likely going to lead to a further re-rating. Morgan Stanley has maintained an equal weight. They believe that ACC at this point of time, given its attractive valuations, provides the most risk reward versus its peers. So overall, watch out for ACC. It could be one of the very sharp movers today.
Okay, thank you so much for that, Vivek. All right, let's move on then and talk about more news and more stocks in news as well in focus. My colleague Vinny Motiwala joins us on Britannia Industries, which has well delivered its second quarter numbers. Like I flagged off earlier, the stock not doing too well. It's down by almost 5%. Vinny, what is it that's knocking the stock down today in trade?
HUL is set to post its Q2 FY21 numbers, and we are expecting a better performance from HUL this time than quarter one. Now, in terms of volume growth, very important figure here, we are expecting a 1 to 2% volume growth. So this volume growth is excluding GSK. So remember that, but we are expecting a 1 to 2% volume growth excluding GSK Consumers merger. Now, in terms of revenue, we are expecting an overall growth of around 14%, and the revenue will stand at around 11,223 crore is what our expectation is. In terms of profit also, we are overall expecting the profits to jump by 15% and will come in at around 2,807 crores. While margins, we are only expecting a 20 basis point expansion, and the margins are expected to be at around 25%. Now, what are the major factors? Obviously, so in terms of revenue, the revenue is highly boosted by the merger between GSK and the Horlicks and the Boost brand is what is boosting the revenue for HUL this time around. Obviously, health and hygiene segments and nutrition, which accounts around 80% of the portfolio, shall continue to do well, but personal care like color, deodorants and cosmetics is expected to be still under pressure. Gross margins also are expected to be under pressure due to higher tea prices, while obviously cost optimization, synergy benefits as well as low ad rates is something that is supporting the EBITDA margins, and that's why a 20 basis points growth in EBITDA margins is what we're expecting from the company. Now, in terms of what are the factors we're going to watch out for, overall, what is the commentary on rural growth is, and the pace of rural growth that the company is seeing, any commentary on demand and demand turnaround, and overall commentary on competitive intensity, anything related to down trading and raw material cost inflation, or what is the expectation from the company are the factors that we're going to watch out for.
Okay, thank you, Vinny, for that. Moving on, the trend of home consumption has been adding to the bottom line during the pandemic. Experts now feel that now the out-of-home consumption trend will revive slowly, and this will add value to the FMCG demand trend. Yes, Shirish Pardeshi with his view.
We should not go by the past, because quarter one was an abnormal year, and I think management also indicated that don't go by that revenue growth which they have reported. So I think as the normalcy becomes pertinent and going forward, the out-of-home consumption which was missing, I mean, with the normalization of offices and people start venturing out, I think you will see that kind of latent demand which will pick up. So what I'm trying to pinpoint, saying that the out-of-home consumption which has been missing last 6 months, I think once the normalcy returns, it will come back.
Okay, well, that of course is consumption, and it's going to be an important one because we had Britannia last evening, we have HUL, Nestle as well coming up. Let's go across to my colleague Varun as well now. He's got some interesting analysis and insights for us. Varun?
Well, that's right. Green Panel has given you a 50% return in the last 1 month, 43 rupees to 63 rupees. So absolutely amazing gains. It's an MDF manufacturer which was demerged from Greenply, which basically means multiple density fiber board. If you've ever seen these modular kitchens or modular homes which have a lot of colored building material, that's basically what MDF is. Today, companies like IKEA only use MDF or a majority MDF. So that gives you an idea of the scope of business over here. Now, the competitors are Century Ply and Rushil Decor, both of whom are running out of capacity and are unable to add greenfield capacity. So it takes a lot of time to put up a plant for MDF, and that's where Green Panel is really enjoying, because there's been a demand surge recently through channel checks with dealers and distributors. What we've seen is that Green Panel has definitely returned to pre-COVID levels, perhaps even exceeding. Over the next 2 to 3 quarters, as capacity continues to dry up, and there's no incremental manufacturing capability available, pricing outlook and margin outlook will also improve drastically for Green Panel. The final trigger, apart from operating leverage and competitors taking a while to put up their facilities, the MDF market itself of 2,200 crore is growing at 15 to 20%. Green Panel currently has spare capacity and the capacity to service half this market. What happened 3 days ago was a very incremental development. There was an anti-dumping duty on MDF coming in from China, Malaysia, Sri Lanka. This duty has now been extended till Jan 2021. We're also hearing that as part of the Atmanirbhar push, there might soon be a very concrete stop on furniture imports. That's going to really propel Green Panel to new heights, because the local demand for that product then will just surge. So keep your eyes on this one. It seems to be on the move. ICICI Securities and other brokerages are coming with a 100 rupee target, indicating almost 70% upside from here.
All right. So thank you so much, Varun, for that. We'll take a very short break right here on the newsroom. Don't go anywhere. Welcome back. You're watching the newsroom on ET Now. As the economy gets back to normalcy post the hiatus of over 170 days, Autocars Hormuz Sarabji believes pent-up demand for autos will get unleashed, as people have not spent much on big-ticket purchases and have, in fact, saved up more. However, it remains to be seen if this demand will sustain beyond the festive season. Listen in.
It is quite surprising. No one expected the auto sector to make such a sharp recovery, literally a V-shaped recovery. I think it's even caught automakers by surprise, and I think that's one of the reasons why, I think they've even managed their production. But don't forget, discounts is a function of oversupply, and, that's basically, there's a glut of supply, discounts will happen. There have been supply chain issues which still persist, especially with tier 3 and tier 4 suppliers. So that, again, has put a slight brake on production, though people are ramping up production as much as possible. But I think it's more than pent-up demand. I think pent-up demand was kind of taken care of soon after the first phase of unlocking. I think it's a combination of a little bit of vengeance buying. I think cars have moved high up in priority. And don't forget, this is coming after 7 months of actually saving. People haven't spent money. They've saved a lot. People aren't traveling abroad. They aren't, going into malls and buying things. They aren't going out. So I think, people have saved up. And I think a car has become a priority, because today people need to travel by car. They feel safe traveling by car, and they want to pamper themselves a bit with a nice car, in the current situation. So I think all these factors has led to what has been quite a dramatic recovery. And clearly, I think the auto sector is kind of leading the charge in that sense from a consumer's standpoint. And I think, it's going to be looking to be a great Diwali. Now one needs to see if the demand sustains after Diwali.
Okay, well, as we approach the festive season, Yogendra P. Trivedi of Sai Service Station says that the worst is over for the Motown industry. He anticipates the demand rush to sustain in the long run and competition in discounts to continue. Listen in.
It will be sustained, because as more and more purchasing power will be added, the middle class had held up for a long time. They are not coming out for exchange of cars also. They were not picking up new cars. But now that pent-up demand will surge and it will go on for a long time to come. We have, in spite of all the handicaps, our profits are larger than what it was last year.
Okay, so that sounds very encouraging, Mr. Trivedi. Is that why discounts are being rolled back? What is the outlook then when it comes to pricing, the discount trends going forward?
Well, that competition will continue amongst the various brands, discounting and giving various facilities, various accessories, and the desire of the consumers to have more facilities and more equipments along with that. That will continue. EMI will continue. But that is a type of price war which is expected in all market economy.
Okay, and so, how are dealers really preparing to ensure safe experiences for customers? Is there any plans in place in order to try and attract higher footfalls, although you said that the trends already have been fairly encouraging?
Well, the efforts are going on to promote sales, various incentives to be given. The dealers have to be organized in a proper manner. All these efforts are going on. These are all companies' own secrets, which I would not like to disclose now, because there is a competition, as you rightly said. Now, so many brands have come in the market, and there is a competition going on amongst all of them. I won't disclose everything, but we are trying to crop up with all the eventualities that might arise. As I said, a private limited company and unlisted, and that is showing such a large profit. It shows, that the automobile future is not bleak, but is very fine.
Okay, well, with that, we are completely out of time, so we'll wrap it up on the show. Thanks for watching.